It went from penny stock to big boy stock.
Our growth stock guru is back, but this time with a warning.
It's just an absolute cash burn. $530 million net loss. There's really no bull case you can make.
Lance Ippolito with TradingPub shares a list of 3 growth stocks he's getting out of now.
The call buying has been big. $1 million orders going to October.
Plus, he's sharing his buy list of 3 growth stocks with huge potential ahead.
Two, these low price stocks just trade around $3.
Could a small investment now lead to a big payout in the future? Let's dive in. Lance, so great to have you on the show. We always love having you on because you have so many great new growth names for our viewers. The last video we did, again, those stocks are doing really, really well. So thanks for coming back on with some growth names. But we're going to start today with 3 to stay away from. I love these videos where we talk about not just the growth names to get into right now, but the ones that are maybe past their prime and not ones you want to be holding on to anymore, right?
Exactly. And let's kick it off with what I call the $20 salads, or maybe even $25, depending on where you live. And even though we had an amazing bull run up on PopMart and NBIS and Grab, the food delivery company, but we also have to be aware that stocks just don't go up. Some names do go down. And the food stocks, especially kind of the healthy, fast casual dining like Kava, you could include CMG or Sweet Green in that same kind of category, they're really starting to take a hit. And I think there's a few reasons why. I think the consumer has really slowed in some of that discretionary spending. And I get it. I mean, everything's gone up so much. And people are saying, you know what? I don't want to spend 20-something dollars on some salad bowl with kale and quinoa. And Kava has really went from a Wall Street darling. And, it's a pretty recent IPO and expanding. I'm getting a Kava right down the street, opening up near me. But the stock plunged on earnings about 15%. And it has not even seen a bounce, despite the market hitting new all-time highs. One thing, too, that I noticed that the foot traffic has slowed. They even said their same-store sales have slowed. And I'm thinking, well, if they're spending all this money expanding to different parts of the world and sales are slowing, shares down about 43% year to date and about 30% over the previous quarter, like the restaurant industry is hard.
For sure. I think the thing to talk about here is that I think just barely a year ago, not even a year ago, Kava was making buy lists all over the place and people were excited about all this growth. And so to see such a quick turnaround is a little concerning, I feel like, for maybe the entire sector.
Well, it's kind of like, think about this. Think about that new restaurant that opens near you and it's making the local news. And yeah, maybe you try it out and maybe you like it and maybe it gets you excited. But then when it really starts to slow, like the most restaurants fail, I think it's like 97% fail. Once it starts to slow, it's kind of hard to regain that strength and that momentum to drive traffic. So it goes to show you, just like you mentioned, that, yeah, it was making buy lists and everything looked like sunshine and roses out there. But when these names start to turn, it could be really hard to recover, especially with all the competition that we're seeing. And Wall Street, just as much as they love something, they are quick to abandon.
Yeah, very true. Well, a good first name on the drop list. Let's move to the second company that you are looking at getting out of the portfolio right now.
Let's go with probably the most controversial stock in the market, and it's Opendoor. I know. We're going to have so many people in the comment section below. We're going to have the haters. We're going to have the people who are absolutely part of the army or the cult of Opendoor. But we have to get down to business. And yes, the meme stocks, the penny stocks, the whole market has been on fire. I mean, I love it. I absolutely love it. It's been fantastic if you're bullish. But we also have to kind of come back to reality and get our heads out the cloud. And Opendoor just crossed $10 a share. Like, it went from penny stock to big boy stock in the double digits at $10. And there was so much news driving it. And what happens, Bridget, is when the indexes, because for the past, I would say few weeks or so, we were kind of just doing nothing, waiting for that interest rate cut decision that made the markets hit new highs. The S&P, the NASDAQ, the Dow Jones, and the Russell 2000 aren't really doing something. Stock traders have to make something happen. They have to chase alpha. So what they were doing is they go into these small stocks, and we saw, many of them, not just Open Door, but we'll focus on that one. And they made the market. They made it interesting. They were chasing alpha, and boy, did they. The stock more than doubled, and there was so much news. They had a new CEO. People were saying, oh, it's a buy because interest rates are going to get cut. People are going to buy more houses and everything like that. But I found out recently who's behind kind of the big uh, Open Door. We'll call it maybe a pumper or promoter to get this stock going higher and higher and building an army on Wall Street bets. And it's a former, or he's actually a hedge fund manager. And he's made some great calls like Carvana in the past, which has done very well. But now I was doing some research, and the rumor was he was going to the rapper's Drake's house. You can't make this up. It's over social media, holding up whiteboard signs, making the valuation thesis for Open Door, and basically trying to get Drake to buy or promote Open Door stock. And that's not going to happen. I mean, there's too many red flags and legal tape to have that happen. So I think now we're starting to see kind of the pump and now the dump, that the stock is starting to see the decline out there. And I wouldn't be shocked if you have short sellers, kind of like the Citron Research, the Muddy Waters, who are more, I would say, reputable, come and take out this stock. I wouldn't be shocked if you see this stock under $5 by end of the year.
Yeah, if you're holding on to it, this one, if it really is this dump phase that you're talking about, would be a good time to get out. I want to hear from you in the comments, though. If you are an Open Door fan and you're contrary, share your thoughts in the comments. We'd love to hear that. Lance, a good second on your drop list, more of a controversial pick. Let's move on to the third name that you have on your drop list.
Lucid Motors, ticker LCID. The EV market is rough. It really is. And you've seen kind of Tesla pivot recently to the robotic division in the master plan and getting involved in not just the EV market, because the tax credit is about to expire for EVs, by the way, too, which is kind of had one last hoorah of everyone wanting to buy an EV. So they get that $7,500 tax credit. That once that ends, and General Motors just came out and said, hey, we're stopping some of our EV vehicles. Stellantis, the maker of Dodge, Jeep, Chrysler, Ram, they just came out and said, hey, we're not going to do our Dodge Ram truck. They're bringing back the V8 Hemi that people love. We're not going to do the electric truck anymore. There's just no demand for them. So you have Lucid Motors that was trading sub $2 pre-split, and it was down 30% year to date. They lose, get this, $300,000 per vehicle sold. And if you go car shopping for like a Lucid Air, they can be right around that six figure. I think some vehicles are in the $125,000 mark, but the depreciation too. So, A, you can't just like go get it serviced like you would a Toyota or a Lexus or something. The depreciation in the used car market is so bad right now that no one wants to spend all that money and take the plunge because, like with pickup trucks and stuff or SUVs, usually businesses will buy them to get that tax credit. But you have these expensive vehicles out there with no buyers, even now with the tax credit. What happens in the future when there's no tax credit? No one wants a $120,000 vehicle. No one wants the depreciation. And there's really no bull case you can make. The Saudis already invested in it about a year ago. That had kind of the last pop in the stock, but it's just an absolute cash burn and $530 million net loss, 300,000 per vehicle sold. I don't see how you turn the business around. especially in a dying EV market.
That's a strong bear case for that stock for sure. All right, well, let's move on to the list that a lot of investors are excited about, and that's some of these growth names that you have for us. I'm really excited about the first stock on your buy list because it's one we have not heard about on this channel yet.
We'll switch from the EV market to the solid state battery. So we still have some correlation in the EV. And the first name is QuantumScape, ticker QS, which the stock has been on fire, squeezing so much recently that when you have that kind of momentum that we've been seeing in some of these, especially small cap stocks, because the Russell 2000 just made new highs. I mean, this is a name that we have been seeing. I trade institutional order flow, or some people call it unusual option activity, basically seeing the largest option orders in real time. And they have been nailing QS with calls, $500,000 orders we just saw. And it's not just short dated, like, going out 2 or 3 weeks or so. We're talking November expiration, so buying some time. And they have a recent partnership with Volkswagen, which is the biggest automaker over in Europe out there. So we have less regulation with some of the solid state batteries out there. And with everything going on and kind of clean energy just in general, if we look at some other correlated names, I really like this stock, and it's still relatively low price. I don't want to say cheap because the stock has made a big move, but relatively low price. And I'm a big fan of risk versus reward. So if you can, not chasing something already up $100 or so, because it's harder to go from $100 to $200. But if you could get something, let's say 10, $13, it's easier to go to 20, $26. And I think that's something that QuantumScape can see, maybe even to start the year right around that $20 handle.
Really interesting company, Lance. Again, a first time we've heard of it on this channel. So thanks for bringing that one to our viewers. I know you talked about the options for this one. You are so good. That's really your expertise. You are trading and in the market every single day. If viewers watching this want to learn a little bit more from you, where can they go?
They can check out my 4 p.m. payout project. It's a simple trade we do at 10 a.m. every morning, and at 4 p.m. when the market closes, the trade closes. Win, lose, or draw. It's not considered day trading, which is great. So if you have a small account, you can do it. And it's a simple strategy that I often say, set it and forget it. Sometimes not looking at the screens all day is the best thing you could do trading.
Yeah, really good. We've got that link on the screen for you and the QR code you can scan if you want to check out the 4 p.m. payout project that Lance is talking about. Again, he's really good at options, but you're also really good at finding some great names by looking at those options every day. So thank you for bringing this list to us, Lance. Let's move on to that second name on your buy list.
So the second name, speaking of options, this name has been running wild this month. It is IonQ. It's a quantum computing stock, which they have been on fire since Trump met with the UK about the quantum computing. And they just signed a deal with the Department of Energy out there that sent the stock up 6%. And it's continued its bullish run along with many of the quantum computing stocks. But one thing that caught my eye about this company is that the call buying has been big. We're talking $500,000 million orders going to October. And I thought they were crazy because the stock was not even $60, but we're getting near that $80 mark in IonQ. And I would not be shocked if you make the bull case that we can see $100 by year end, because the Russell 2000 is breaking out. IonQ is a part of the Russell 2000. The shares have been rocking and rolling. They're up over 600% in the past 12 months, which I get. I mean, that's massive. But their CEO, his expectations are $1 billion in annual revenue by 2030. And if we look at everything going on with OpenAI, NVIDIA, Oracle, it just seems like every day there's some new news with these three massive companies. I think Wall Street has realized, hey, quantum computing is not just, a hype name from a few months ago. It's here to last. And there's so much demand that we're seeing in this space that I really like. Out of all the quantum computing stocks, IonQ kind of as my favorite, as the darling, and it's done very, very well for us. And I think it continues. I would not be shocked at $100. There's a lot of shorts, aka people betting against these companies. And now they're starting to wake up and say, hey, this is real. When you have the president signing deals and getting these, Department of Energy contracts, you can't ignore it.
And this is such an interesting field because, like you said, it's been so hot. It was not hot just about 30 days ago, maybe a little bit before that. These were all just kind of dead, not doing anything, moving sideways. And now they're on this huge bull run. So I think for some long-term investors, it's hard to get in when it's this high, but you still see a lot of upside ahead, even for those long-term investors out there.
I was trading short dated options on it around 40 and a half bucks a share, and it kept going up. And I'm like, man, I should have went out in time. Then I did go out in time and the options did well. And I sold them. And now they're up like 3x from where I sold them. I'm having FOMO on my own trades because it's moved so aggressive. And that's one thing too about these names is, let's say the market goes flat again. I think you can have that rotation continue. As we talked about, investors are always going to chase return. They're always going to seek alpha somewhere. And just like you said, how they were dead for a while after a big run up, I think this is kind of the second leg in that bull run, which it can last and it can continue. So I really think by October, third week of October expiration, right around 80 bucks and heading into year end, especially if the market holds, especially small caps, 100 bucks isn't too crazy.
All right, very interesting. Let's get to your third and final pick on your buy list. And this, again, another new name for our channel. I'm excited about this one.
Yeah, and this is kind of what I love too. These low price stocks, the stock just trade around $3. So it's low price, which is kind of my specialty out there in the option market. And it's Ballard Power Systems. The ticker is BLDP. It's a Canadian company. Old Canada out there for all the Canadians out there. And it was really left for dead for quite a while. Kind of reminds me of QS. They've had big runs and they kind of just have no more volume and people forget about them. But with all the government subsidies for clean energy, and we have seen clean energy stocks absolutely roar. Look at names like Irene, Bloomin Energy, ticker BE. Even Plug Power starting to make a comeback, which was a name from years ago, starting to make a big move. The hydrogen infrastructure we're seeing expand. Ballard Power Systems out there, it's already up 36% over the past month, 90% this quarter out there. But people were scared of a cash burn, kind of like Lucid, where they're losing money and everything like that. But they recently reaffirmed guidance, easing some of those cash burn concerns, high short interest. So a lot of people betting against the company. So when they start having that bullish momentum, you really have what we call a short squeeze or a squeeze. And that's what happened, kind of an open door when it went up so much to that $10 level, that I think the fundamentals are solid because it's clean energy, but also you have it being an unknown stock under the radar. You have a lot of what we call shorts that are trapped. So people who've shorted the stock in the past, who kind of forgot about it. And as the stock starts going up, the shorts have to cover, sending volume in the shares higher. And that's when you get kind of that parabolic move to the upside. And BLDP, just like we saw in Bloomin Energy, ticker BE, it was kind of left for dead for years. And it was a low price stock. Now that stock's approaching over $80. Now, I don't think Ballard Power System hits 80 bucks. I think that's crazy to say. But a double, $6, that's 100%. 9 is a triple. So you're flirting right around that $10 mark or so. I don't think it's that crazy.
So much information. Lance, you are a wealth of information. Thank you so much for sharing so many great names with our viewers today. If you love what Lance has to bring to the table, again, really unique ideas, those smaller stocks, make sure to check out his link again. You can scan the QR code or click the link in the description to get more from Lance and his team too. They have so much information on options, but also just on some great unique stocks that you haven't heard of yet. So make sure to check that out. Lance, thank you again so much for your time today.
Thank you, Bridget. Always love being in front of your audience. And last time I was on, the comments were on fire. So let me know your thoughts below. Make sure you like, subscribe, and leave a comment. I read them all. Hopefully we'll respond. And let me know what you think about these 3 longs, these 3 shorts. And if you did well and grab NBIS and PopMart, let me know too, because that was a fun one.
Love it. All right, Lance, thanks again. And thank you for joining us, everyone. As always, happy investing.